So I know the Fed has, if you watch the reverse repo reports, the Fed has basically unwound its position by almost 90% at this point. Let's say we see continued downside. Do you see the Fed really injecting liquidity back into the treasury and the bond market?
So they're already starting. We could see that with it's sort of hard to see because they have to inject the issues that we're having with liquidity is global US dollar liquidity. And we should do a video at some point where we explain like more specifically what that is, because most market participants, when they are retail participants, they think of liquidity as the ability to buy or sell a stock as close to spot as possible in an asset.
Hmm.
So like what's the slippage, or they think of it as zones of liquidity on a chart where there might be orders for buy and sell. I'm talking about the availability of dollars to finance the creation of new money through the credit system
Hmm.
throughout the world. Because of that, most of the dollar system is opaque. It's happening on balance sheets outside of the United States, called the Eurodollar system. And so, what I found to be fascinating was that with the crash of the Nikkei and the spike in volatility, what did we see with the dollar? The dollar fell. The dollar usually rises in times of crisis, but it fell, which means that it pretends this idea that liquidity was already starting to be pumped into the market in anticipation for this rollover, which makes sense. Like the volatility issues that Japan was seeing has been talked about in the higher ends of the financial markets for months now. Like we've known China's had a liquidity problem. We know Japan's had a liquidity problem. Janet Yellen was there trying to figure out what to do in order to balance the system off. So this was known. And so they must have already started to inject liquidity within the global financial system in order to make dollars available to these nations and in order to uh, stabilize the markets. Then we saw the yen, the dollar yen spike. Right, we
Hmm.
saw the value of the yen move up. Well, that only happens when the Bank of Japan intervenes in the markets in order to prevent the drop of the yen. And so they're already working behind the scenes in order to introduce liquidity, is what I'm saying.
I see. But
And
it
so we're
started
going to
with the
start seeing
Japanese
that.
market, though, to be clear. Like, you think the Japanese market has injected liquidity first. I'm
It started with
asking
the
if,
Chinese market.
oh,
The Japanese one is what we saw with the stock market. The reason why it's hard for us to see in the Chinese market is that it's not transparent to us.
right, right.
Their issues are with the what is it, 70% of their population is invested in the real estate market, not in the stock market. And then they have all these caps for how things can actually move in their stock market. And so, but what we saw with they had started mass. I mean, I think they put in, it's something like, I think $1 trillion worth of renminbi into their markets in order to try to bolster it. And the yuan is always in competition with the yen inside the that area of the world, in that part of the Eurodollar system. Because, well, I don't want to get too in the weeds of that, but essentially, um, Japan and China almost have to work together in some way, in this hostile way together, in order to keep the system balanced, because it's mutually assured destruction. And so the fact that the Treasury Secretary has to go there in order to negotiate sort of like this peace deal of how we're going to keep the Jenga tower up means that they're already in the liquidity mindset. But it started with China,
Hmm.
and we're seeing it reflected in Japan.
Okay, so our audience is on the sidelines here watching us have this high level global economics conversation, which I find fascinating. And to be clear, I think Tom, you have a fascinating viewpoint on global economics that I don't have because I don't read the same things you read. I spend so much time as a technical trader and sort of a U.S. equities fundamental trader that I just kind of ignore a lot of economic stuff. So it's really fascinating asking you these questions because I think you have a lot of education to provide.